Time for another stock review. This time we are talking ASTS, AST SpaceMobile. Let's have a look at it. Very interesting, this one. A lot of movement recently. It's been trending downwards with some opportunity to buy, but now we've got a massive rally for the first time in its history. Let's see why. Let's see what's going on. Maybe it's a buy for you. Remember, I don't own the stock. I only own the S&P. No one from the company sponsors or pays me to talk about it. I'm simply doing it as a request to one of my members to give you the most honest review you're going to see on YouTube TV. Tap the like button if you like this. Consider subscribing to the channel. In this review, you're going to see lots of information, including we're going to start off with the basic line chart. We're going to go through and look at the company and show you all the financials. Who's buying, who's selling, are they making any money? What's their debt position looking like? Inside trading, what's all that about? We're also going to share with you, go over and show you the latest news, take a look at the website. We're also going to look at their latest earnings, latest reviews, and all the rest of it. All of this is going to go on as well. And we've also got a back test with the S&P, looking at the chart. All of this is going to be provided and hopefully give you the information that you need to make an informed decision whether it's a stock that you want to buy or not. Is this a stock that can go to the moon? AST SpaceMobile. What do you think? Can we zip through space? You like that one? I created that one myself. You like that? It's pretty good. And then hopefully land on the moon. If you look closely, you'll see my reflection. That's how much detail I put in. Most people don't even pay attention. But anyway, what do you think? As we go into space with AST SpaceMobile, we are talking about 5G in space. We're going to zip through space. We're going to provide you with all the information. But most importantly, what you're all concerned about is, can we make money with the stock? Is there money to be made? Well, we're going to look at that as well. Is the money printer firmly on? Let's scratch our chin. Let's rub the chin and go, let me see. Okay, let's start with it right now. I make all these videos live. I have no editors, no one helping me. I run everything myself in this TV studio, and I hope you like this live content. I don't make videos and edit them. I just do them live like this. It took me 2 years to build the studio so I can do it like this. Right. Let's get into it. Here we go. So we're going to start off nice and simple with the basic line chart. Here we go. What is AST SpaceMobile? Zoom in. AST SpaceMobile engages in building a broadband cellular network in space. Think of it, a cellular network in space. I've always wanted that. Just in case I nip to the moon, I want to be able to text my mum and say, put the kettle on. Just saying. Right, in space, to operate directly with standard, unmodified mobile devices based on an extensive IP and patent portfolio, patent, depending from the US, the UK. It focused on providing mobile broadband services with global coverage to all end users without the need to purchase special equipment. The company was founded by Abel Avalon on May 31st, 2017, and is headquartered in Midland, Texas, just down the road from me. I might pop in and see them. All right, ASTS, around since 2017, quite new, Midland, Texas, 489 employees, and Abel Avalon. If you'd like Abel Avalon on the show, we have a Meet the CEO series. Please do email investor relations and ask them to be on the show. Build up a relationship with them. Tell them that you're an investor and you'd love to learn more about the company. We rank #1 for most of the stocks that we cover, and I'm sure we could draw a lot of attention to the stock. Not to pump it, not to dump it. I only own the S&P, but to provide them with information and investors with information about the company. If you are buying at a margin, it's regarded as fairly high risk, 60%. I gather that's because of the recent, everything's been trending down until now. Average volume, 33 million. The volume today is just under 6. Okay, 52-week low, 197. 52-week high, 39.08. So you can see it's been trending down despite we are up at the moment. Okay, let's go down. Look here, I'll come on to the ownership, the hedge funders in a moment. We'll do that in more detail. But is it a buy? 100%. 100%. I've never seen that. Morningstar. Very rare you see that. No hold, no sell, just buy, 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 buy. However, Morningstar are paid to review the stock. No one pays me to review the stock. I just get a tip from a member to say, could you talk about it? No one from the company says, could you review our stock? A bit like JD Power being employed as a marketing agency from Chevrolet saying, can we have an award for the best car in America? It's ridiculous. I don't know why anyone even pays attention to it, but that's what happens. Anyway, what about the earnings? Well, we're still losing money. That's not surprising, is it, with a company like this? I don't see many people setting up house on the moon yet and requesting 3G or 5G cellular service. I know, I'm only joking. There's more to it than that, of course, right? But nevertheless, you have to explain these things. Some people will go, he just doesn't get it. He thinks it's all about sending a text to his mum. Yeah, I know. Right, so the stock is losing money and been trading sideways, not really doing much, just going sideways. But we've had a massive, massive miss recently. So why is the stock going up? Why is the stock going up when we've just had this huge miss? That's unusual, right? We're expecting to lose 22 cents a share. We lost 51 cents a share. It's our biggest miss ever. What's going on? Could it be guidance? Could it be where the stock goes next? Could it be short interest? I don't know. Let's have a look. Is it a short squeeze? Why it's popped up? I don't know. We'll cover all that in a minute. Anyway, that's it for the main basic chart. Let's now go over to this position here and see who's buying and selling on the inside, first of all. Scroll down here, insiders, Robinhood. We're not really interested in which Robinhood, what Robinhood investors think of it, other than the sentiment. And as you can see, it's generally buying. I'm more interested in insiders and hedge funders, if I'm honest. Let's have a look. Hedge funds. Nothing wrong with my Robinhood fellow investors, but I care about what the hedge funds are doing. Let's see who's recently dumped the stock. Recently dumped it. Let's have a little look. We've got, there we go. No Street GPLP. Jeff Osher just closed a position of 2,500,000. He sold it all. He sold it all. No shares. Took his money out. I'm out. I'm down the road. Opened a position though. Entry Point Capital and Hussman Strategic. They opened much smaller positions, but nevertheless, they've recently opened a position. But we just had some profit taking. That doesn't surprise me with such a rally, especially on a miss. It doesn't come too much of a surprise, does it? Insiders, well, they've been selling recently, back in March, May, but nothing really now. That's interesting. When the stock has rallied, they could have sold. They haven't. That's interesting. So what have we got here? Uninformative buy. So this is not. This is just. This is not sentiment. This is just automatic buying. And in fact, cumulative via grants and awards. So they're just basically paying themselves in awards. No big deal here. Nothing to worry about there. Nothing negative there. They're just paying themselves in shares. So it's a little bit. So nothing to worry about there. Let me scroll back up to the top, and let's go and dive now into some much more detail. Now, if you want the buy zones, the sell zones on the chart, the person to speak to is not me. The expert in the chart reading is Sensei. Does a fantastic job, extremely well. Join Sensei on Sunday. I'll give you the link below, and he will give you all the buy zone, sell zone, support levels every Sunday, 3 p.m. Central, to find your positions to trade this. How does it compare to the S&P? Well, if we look at this, you can see the S&P is in green and AST SpaceMobile is in blue. Going back from 2020, we've only got 4 years to really compare it. So as you can see, it followed the S&P relatively for a while, and then it fell off Been coming down, trending down, and all of a sudden, boom, if you bought it here, boy, would you be happy. That's why, obviously, some of those hedge funds have trimmed off here. Makes perfect sense. Insiders are just holding though, which is nice to see. But now we've beaten the S&P. So if you put $10,000 back in 2020 and reinvested the dividends on the S&P, you've now got 18,000, near 2x. Very, very good. But you've got a 2x now, but only happened recently on AST. So we like that. All right, very, very good. That's how it trends with the S&P. Let's have a look at the ratings here, how they've changed over time. Seeking Alpha analyst. Again, I'm an analyst. You don't have to be a financial advisor to be able to talk on this stock. You just have to have an opinion and prepared to do so. They're saying buy. Wall Street saying strong buy, more interested in that. And the AI software saying hold, more interested in that. Growth has gone from A to B+. Profitability, A- is now A. That's good. The company making expected to make more money. Momentum, C+ to A+. That's good, but revisions of B- down to D. So some positive news there. In the factor grades there. Now, if you like Seeking Alpha, I have a referral, so you get $25 off. It's the only way you get a discount from Seeking Alpha, and also you get a free trial. You don't get any of that without my referral. You pay the full price and don't get a free trial. So you might as well try that. Okay, that's in the chat, and I'll also post it below if anybody wants that. Let's look at the latest numbers. This is just a couple of days ago, and they missed on earnings. Normalized actual was 51, and it was they missed by 29 cents. The revenue was 900,000. Revenue surprise beat by 25. Okay, so we did get a revenue surprise beat, but the stock missed on earnings. Let me just check how that appears on here. There we go. Estimated 22, and in fact, it was 51. There we go. I'm just double checking my numbers. That is correct. I always like to double check the numbers because some of these services can be wrong, and I like to always check. All right. Let me go over to this. Now, this is the news just out a few days ago. AST SpaceMobile soars to new high with September launch on track. This is what it's about. Is it a buy the rumor, sell the news? Well, it is the news. It is happening, but nevertheless, they might dump when it actually happens. Let's have a look and see all about it. Okay. AST SpaceMobile jumped 38% Thursday morning. That was just a few days ago, reaching a new all-time high following a report with revenues in line and the company confirming it was on pace for a commercial satellite launch in the coming weeks, a key catalyst. The jump was the stock's biggest since May, when Verizon committed $100 million to a partnership with the space-based wireless service provider. ASTS stock rose more than 69% on May 29th. But key to earnings this quarter was ASTS updating the progress of launch plans for its first 5 commercial satellites. The Bluebird satellites arrived in Cape Canaveral, Florida, last week after final assembly in Texas and are now in final preparation for a mission via Falcon 9, of course, SpaceX. They're now set for an orbit and launch window in the first half of September. We are shifting from research and development to full-scale production and commercialization of our space-based cellular broadband network. CEO Chairman Abel Avalon said on the company's earnings call, "Our technology is proven, patented, England, America, and validated. Our commercial ecosystem is in place and growing. We are funded to achieve our near-term goals and reach initial revenue. Our business is now accelerating." With the first commercial satellites, the company has targeted nearly 100% geographical coverage of the continental United States for its direct satellite-to-cell phone service offering. Initial service for AT&T and Verizon beta testers will begin after a few months. Among Wall Street analysts raising targets Thursday, UBS boosted its objective to $30 million from a previous $13 million. $30. Sorry, did I say million there? UBS boosted its objective to $30 from a previous 13. I like to always correct myself. All right. Okay. We've got a strong buy from Wall Street, a hold from Quant. Anything over here? Let me read you this as well. We've got a business update. We just covered a bit of the earnings. Let me just read just one paragraph of this. We stand at a pivotal moment for AST SpaceMobile, said Abel Evelyn, founder, chairman, CEO of AST SpaceMobile. The arrival of our first 5 commercial satellites at a launch site marks the culmination of years of relentless, innovative and perseverance in partnership with industry leaders like AT&T, Google, Verizon, Vodafone, and Rakuten. Among others, the upcoming orbital launch is a significant step forward, fulfilling our mission to eliminate dead zones and empower communities worldwide with space-based cellular broadband connectivity. I love it. I love it so far. However, is it too late to buy the stock? Is it too expensive? Well, I'm now going to show you the numbers, but I strongly recommend that you join Sensei on Sunday, and he will provide you the buy zones, the sell zones, the support levels. If you are a member and members only, you can request technical information from Sensei to find the levels to trade and make money. End of the day, that's what investors do. They're looking to make money. But is it all worth buying right now? What is the business? What is their balance sheet looking like? Is it too expensive? Let's have a look at the numbers right now. So tap the like button if you like this, and subscribe and ring the bell. Here's the most important part. We're now going to use Alpha Spread. I know the CEO, and I have the best deal that anyone has. All my members, live chat now, get 10% off, free trial. Everyone watching the video, look below in the comments and you'll find the link to this. This is the most important part of the review to see if it all adds up from a money point of view. Okay, let's do it right now. Here we go. All right, so if we look here, and it's a reliable intrinsic valuation. It's overvalued by 57%. So I only overpay 25%. I don't change that rule for anyone. It's expensive right now. It's rallied right now. Can it continue? We don't know. Can it grow into the stock? I don't know. We'll look at the numbers right now. Best case scenario, if things go well, and as we might expect, it is undervalued. That's very worth noting. Overvalued by 96%. If you look at the worst case scenario is the satellite blows up in space and doesn't work. All right, obviously. Base case, it is a bit expensive. So because I like the industry and like potentially where we're going, I don't know yet. I've not looked at the balance sheet. I don't know how well funded it is. I don't know if it can survive. I don't know if it's got a good balance sheet. We'll do all that now. But I would say if I like this, if I was buying this now, I would put down marker shares. 25%, yeah, I'd put 75, 80% in. I would keep my other 20% of allocation for a dip and a pullback after the event itself, because there's probably going to be some set selling. We've already seen some insight. Not insiders, but hedge funders trimming off. Makes perfect sense. However, I'd like to be in. This could run and run, right? This could be a lot more for this company. Best case scenario, 51%. But I would be looking for a pullback, and so I'd be putting 50% in now and then holding the rest back. All right, that's what I would be doing. Right, let's scroll down. Let's see if the balance sheet adds up. Now then, let's start with revenue. Revenue. When was the most recent? September 24. That's an estimate. There we go. That's our most recent report, June 29th. 1.4 million, nothing really. But now it takes off. 58 million, S-curve. Everybody wants to see an S-curve in their business. Up 180%, and now we fly. Revenue, good. Projections, great. Operating income, down 2%. Net income, down 60%. But look how it's expected to increase. That's what we're looking for. We're investors going forward. Financing cash flow up 15%. Investing cash flow down up 10%, which is a negative, right? Operating cash flow up 21%. We like that. So there's potential going forward. Balance sheet. What we don't want is a heavy cash-rich business with just tons of cash, not doing anything with it. 579 in assets. 285 in cash. Too much cash. Like it to spend more on the business. You know, it's great to have cash, but we like to have it invested in working. 579. Liabilities is nearly as much as assets. That's not good. Balance sheet isn't good. What about long-term debt? Long-term debt, 200 million, 199. 199 million, and we can pay our debts off. We've got a couple hundred million left over. So we can pay all our debts off. That's good. So we'd have no debt. So we can bring that down. So even though I don't like the fact they've got so much cash, they've also got debt, which they could pay off straight away. So we could bring our debt down to 30, 40 million, something like that, which I'd prefer. Pay off our debts. Rates coming down, good catalyst. I like it. All right. So long-term debt, 45%. We can pay that off. Rates coming down, profit going up. It's not a great balance sheet, but I can see how it could become a good balance sheet, right? That's what we care about, really, isn't it? Now, obviously, the margins are rubbish. They're not making any money. They're about to make money. Margins, rubbish. Do we need to go over that? Not really. I'll show you on the screen, but, you know, margins, rubbish. Getting better, yep, definitely stepping up. You see the blue line at the top. Things improving, yep, things improving. But let's not talk about it. It's rubbish. Losing money, don't like it. Obviously, we're in that position right now. Profitability. Is that the lowest core we've ever seen? Have we seen below? I don't think we've been seen below 8. Invest, build the business, making no money. Yeah, I think that's the lowest. I don't think we've ever seen one lower than 8. If we have, it was 7. I mean, that's as low as it gets. Make no money, doing nothing. However, long-term solvency, 46. Now, imagine if that profitability was just 15. Still red. We'd be in the 50s. So we got a bit of cash. We got debt control. Balance sheet's okay. This could massively improve. And that's what you're looking for. You're looking for a business that can explode. You're looking for a business that you can buy at the bottom and take up, right? So it's not going to go anywhere. I like the business. As long as we don't blow up in space and nothing crazy like that, this could be good. Partnering with the right people. It's about to launch it. Money's going to come flooding in. Now we're moving forward. I like it. So far, it's okay. It's not a great balance sheet. The profitability is rubbish, but we're about to move forward. Now, Wall Street, as you can see, downside from here. Worst case scenario, 55%. Because it's overbought now. It's you want to pull back. That's why I say 50% in, get a pullback. I want to be in this stock, I think, but I want to be having money on the side to buy the dip when it crashes down, because it could easily do that, especially after the event, because buy the rumor, sell the news. It's how it goes with all space stocks, really. Do I want to wait? No, I want to buy. I want to get in, but I like it, but just in case. But I'll put 50% of my money in, I'll hold 50% back, hoping that it'll pull back, and then I'll be fine with that. So there's a downside here, but let's look at the average. I don't see it. This is the worst case scenario. No launch. There's going to be a launch. Let's be positive, right? SpaceX is reliable. I would say the launch is going to happen. I would say it's going to, the giant Pez machine is going to put the satellite into space. I'd say we're going to be all right. So the downside, only because it's overbought, that's where you'd buy it again. So I'm okay with that. Best case scenario, see, Wall Street don't like it. Because they don't gamble. Wall Street are traders, not investors. They know it's overbought now. They know it's likely to go down now. What if there's a crash? What if there's a problem? I can understand that. That makes perfect sense. Right, here we go. Short interest, 18%. Not enough volume, not enough short interest. Can we get a short squeeze. Not at 18%, we can't. We need more. We need plus 20, much more, 25, 30, then good news. Well, people might want to short it now because it's rallying, thinking, what if there's a crash? What if it doesn't go off right? What if there's a delay? I don't think there's going to be. SpaceX are very reliable now. I don't think that's going to happen. They get very good at deploying their satellites. Don't see a problem. Boeing, not so much. SpaceX, so much. Absolutely. So I don't see a short squeeze. However, might not be a short squeeze, but there's still going to cover the positions, right? People switch and go, oh, sod it. I'm going to jump on board and turn these into buys. And then the stock does go up. Not much of a short squeeze, but it could be an accelerant. So that's quite good, I think. We talked about the ownership. And that's it. Schwab, they removed their video. Very, very naughty. I never remove any of my videos. Always leave what you said on the record. Don't take it off. Anyway, SpaceMobile. Let me give my thoughts on this. My closing thoughts. SpaceMobile. I like the industry. I think this is definitely the future. I've been looking at this before. It's very risky though. It's popped up a little bit too much. Buy the rumor, sell the news. I would be looking to buy 50%. I would like to be in this. I see a huge growth and potential in this industry. So I'd want to be in. So if I had $1,000 to spend on this stock, not everything, on this stock, I would go 50%. I'd put $500 in. I'd keep $500 out, and I'd watch the flight. And if you want me, I can cover it. We can cover the earnings. We can cover the news. We can cover all the events to do with the stock. If we get a dip, people sell off, take profit, then I'd put my other 500 in. I would get like a 10, 20% discount, and I'd buy it. And I'd be okay with that. I'd buy the dip, and I'd be okay, because this is what the company's been waiting for years. It's now happening. Interest rates are going to come down. That will help their debt position. They've got a bit of cash, but the cash can be used to reduce debts. That will improve their balance sheet. Their profitability is bound to go up after this. The interest is going to go up. They don't need to dilute the stock. We're not anywhere near territory of diluting stock or whatever. They've got a bit of cash there. It's a buy from me on the basis that I would put half in and hold the rest for the sell-off. Rather than just wait for the sell-off, I'd rather get in with half my money. There's my opinion on it. So there you go. There's AST SpaceMobile. That was requested by one of our members this morning. Thank you very much indeed for that. A big super chat to cover this straight away. It jumped to the top because it was a $50 super chat. Click above my head for all the links, and down below in the description, I will give you Alpha Spread, Seeking Alpha, and the link to Sensei Sunday Show. Join in for that. And all the links to my software that I've just been using. Over here, I shall put my full playlist of Alpha Spread. I've reviewed over 200 stocks. Down here, I'll put the AST SpaceMobile playlist. I've done several reviews on this already. See how it's changed over time. You can go and judge me and challenge me and question me. That's fine. I always leave my videos, unlike Schwab, who apparently take away their videos. Anyway, I shall put that down there. That's it from me. Thank you very much indeed. Until next time, as always, take care of yourselves and each other.